Hey everyone, this is Kirk here again at Option Alpha. So today we're going to be talking about one-trick pony option traders, why they die, and why agility is vital. This is super important because as the market has been a lot more volatile, this has really kind of come to the surface where we see a lot of one-trick ponies start to die off. It's super important that you do not let yourself become or stay a one-trick pony trader because you need to have agility. That agility is vital to your success. So what do I mean by this? Well, agility is vital because it means that you have flexibility with your trading to move your entire portfolio or all of your strategy in a moment's notice. And that really is one of the main benefits of options trading above everything else. It's one of the things I've talked about for so long. It's why I personally love it, because you can't do that with other things. You can't do that with real estate. You can't magically, at the snap of your fingers, turn your entire real estate portfolio into a different direction. You just can't do it. It's just physically impossible. But only with trading can you completely change your strategy, completely change everything you do on a moment's notice. And that agility is really vital. We've seen it this week, this last month, this quarter this year, where the markets were just churning higher, chugging higher, and then had a huge shock. And now you see a lot of traders who weren't ready for that change. They weren't prepared for it. They didn't have the agility in their portfolio. They basically were one-trick ponies. They could only do the one strategy they were, basically designed to do or know how to do, or their favorite trading strategy. And when that market environment isn't there anymore, they don't know what to do. They flounder, they die, right? And so this is really important. I think about this one all the time. This is like what I think about here, which is like, why are you still trading long-only strategies? But you could replace this for anything. Why are you still trading the one single strategy that you love and you're good at? I'm not saying don't trade just that. I'm not saying stop trading that strategy. I'm just saying don't do only that strategy. And that's the real key point here. It's like, you should not be, as a trader, a one-trick pony. One-trick ponies absolutely die. And the concept that I thought of and just will entertain today is this idea of playing a round of golf with just a putter. This is the same thing you're trying to do as a trader if you have one strategy that you're trading. And unfortunately for a lot of people who are manually trading and are not using automated systems, this is as much as you can do mentally. You can only mentally comprehend one strategy. And maybe you can't get it perfect, but you can get it most of the way there because you've been doing it for a while. But it's like playing a round of golf with a putter. You could do it, it's possible, but it certainly doesn't mean that you're going to have a good experience or have fun doing it, or it's going to be easy, right? And certainly a putter is not going to be the best club or tool for every different environment on the course, right? And so I think about people as one-trick ponies as this. This is exactly what, in my mind, a one-trick pony trader looks like. If this is you, you can just say, hey, look, this is me, right? If that was you, you can say this. You're my one and only trading strategy, and I love you so much, right? And the problem with one-trick pony traders, in my opinion, is that you get to know this strategy, and that is your downfall. Your downfall is you've traded this one way, this one strategy, this one technique, this one thing, and you get to know it so intimately. It's like this guy with this horse, right? He knows this horse. He knows when it wakes up and how much it eats and what it likes to do and how far it can run. And you just get so intimate with it. But the problem is that it pales in comparison to get up every day and maintain and feed and water this horse when you have something like a truck, right? If the goal of having a horse is transportation and moving around, right, then actually a truck is a significantly better tool, right? Because it's just more versatile. It can go anywhere. It can do anything, right? And it's a machine. It can be programmed to do stuff that just an animal can't do, that you have to manually take care of, right? And so this is why you've seen, just as it's not to beat a dead horse necessarily, but to beat a dead horse in this example, but the replacement of horses by cars started very, very slow, and then it eventually accelerated, and now nobody takes horses anywhere to, as a meaningful mode of transportation. It just doesn't happen, right? And so I think what we're seeing now is I think we're starting to see the downfall of one-trick pony traders who have done the one strategy, the one thing that they're used to, and it's starting to be replaced by people who are using automated strategies and doing multiple strategies at the same time that are turning off and turning on for different market environments. And that's really the key point, is just how can you build resiliency, agility into your trading strategy moving forward. So if you don't believe me, this is a good analogy for it, and just a kind of good walkthrough of a couple little history lessons. But The first one here is this date. If you don't remember this date, it's back in 2018. This is lovingly referred to as Volmageddon. And Volmageddon was a really important day because on that particular day, we saw one of the largest ETNs completely blow up. And so if you think to yourself, okay, I have this strategy. The strategy is super resilient. It's never going to do anything, right? So to use the pony analogy, my pony will live forever and it will never die. My horse will never die. Well, it's just not true, right? So on that day, we found that the XIV ETN, which was an ETN that was worth nearly $2 billion the week before, completely blew up, just absolutely blew up. And that just showed you that one market environment, one shift of how things now change, or a different regime shift in the market, can completely make a strategy irrelevant moving forward. And you don't know when that's going to happen. You don't know when your pony is going to get shot. But that day, that pony got shot. So here's another one just to kind of prove the point. So this is a look at a major market ETF or major market index. You can probably guess which one it is. I didn't put it on here because I just want you to guess and just kind of think through it. But just look at this chart right here for a second. If you look at this chart from basically 1950, this is a major market, okay? You look at this chart from 1950 until about 1990. This thing was up and to the right. So for all of people's total existence in this market, the only thing they've ever seen or thought at that point was that the markets always go up. They always go up because they always go up. They always go up because they've always been going up and they always will continue to go up. And it was at that point exactly that the market stopped going up. And then basically for the next almost 30 years, the market did not go up. In fact, it traded sideways to down for a long time. Now, if you don't know which one this is the Nikkei in Japan. And the Nikkei took 34 years to regain its original high. Now that, I guarantee you, when that original high was put in, nobody at that time, even years after, even 4 or 5 years after, thought, okay, we're not going to see the high for another 34 years. No, of course, because the only thing they ever knew was that they just had to buy long, right? Go long the market, and eventually it would go back up. But what if the market that we're in right now is like that market? Because we haven't seen that yet. We've never seen that. I'm not saying I don't know what's going to happen. I certainly not going to try to predict. I'm just saying, what if what has always worked will not work again moving forward? What if the strategies that you have always used, or that one strategy that's your favorite strategy, doesn't work moving forward? How can you adapt? Or how long can you last? How many years can you go, like assuming that your pony has not been shot and is now dead, before you start to create a different strategy or create a different plan for yourself moving forward? So the reality is, and this is where I think people are right now. This is why I'm doing this video. That's why I hope it helps out. I think a lot of people are skating on thin ice. I think that in this market environment where we've already seen a down move, that has already hurt a lot of people. And honestly, it shouldn't have hurt you if you were prepared for it. Heading into it, if you're doing the things that we talk about, it shouldn't have hurt you, right? It could have like bruised you, could have nicked you, right? But it shouldn't have killed you. It shouldn't have hurt you so bad. But I think a lot of people are skating on thin ice. And I know you're skating on thin ice if you're still watching this video and you're thinking in the back of your mind, maybe I'm trading one strategy and I'm not doing enough strategies. Maybe I'm not doing enough strategies for different market environments. Maybe I don't have some bots set up that take advantage of high volatility, low volatility, up moves, down moves, sideways moves, whatever. Maybe that's where you need to go because you're skating on thin ice, and unfortunately, eventually the ice may break, okay? So how do you get started? So here's what I think you should do, okay? Practical steps on how you can kind of change course and course correct. Number one is you got to have acceptance of your current state and a commitment to changing. Write it down even. Just be like, I will not be a one-trick pony. Like, I will find different strategies. I will develop different automated strategies. I will find strategies that work in different environments and create those strategies. Number two is time block for researching new strategies or back testing your ideas. This is critical. This is a fun one for me. I spend a lot of time doing this, but like block out some time, like put on your calendar, put on your schedule that for the next week or 2 weeks or 3 weeks or however long you want it to be, you will just fully dedicate to researching new ideas, back testing ideas, testing things in paper trading, like trying to figure out what kind of fits your model, right? Write down some different ideas like I need a bot that does well in high volatility. I need a bot that does well in low volatility. I need a bot that does well in up markets and a bot that does well in down markets. Like time block that right now so you can just go out and have time to research it. The third thing is commit to implementing one new strategy maybe this week. It doesn't have to be this week. I'm just saying put some sort of commitment, some sort of timeline on it, some sort of deadline on it. It could be this week. It could be this month. It doesn't have to be perfect. This is the key here. Please don't feel like you have to be a perfectionist on this because all you have to do is just get started. You need to have progress moving forward. You've got to have something that you can come back to and say, okay, I started this, I started implementing it, and then you can kind of course correct as you go. But you've got to start moving down that path right away. The last thing that you want to do here is you want to build a habit of recycling this process for additional strategies. So what do I mean by this is that once you do this, now repeat the process over and over again to develop new strategies and add them to your trading arsenal, your portfolio, right? The beauty of using automation and bots is that once you have a strategy going, you can then spend time researching new strategies to add to your portfolio. You don't have to be in the day-to-day grind and weeds of actually executing the strategy. You can actually spend that time better elsewhere by finding new strategies that you can kind of weave into your portfolio moving forward. And the end result here is that you ultimately want to remove yourself as the bottleneck. See, right now in trading, you are the bottleneck. If you are sitting there implementing the strategy, implementing the trading system, finding the ideas, right? Having to log in every single day, having to check the markets every single day, you're the bottleneck, right? And that only can get you so far. You only have the mental capacity to do as much as you can possibly do and remember. And that's why a lot of people are just one-trick pony traders because they just don't have the capacity, no fault of their own. Just we as humans don't have the capacity to do more than just we have brain space to do, right? And so you are the bottleneck right now. You have to remove yourself from that bottleneck. And you have to eventually become a bot manager. And this is kind of the image I, had ChatGPT kind of create, but it's the same concept is that you are the manager here. You're the general, you're the commander of this army of bots that are working for you. And some bots are doing different tasks. Some bots are digging, some bots are, scraping, some bots are shoveling, some bots are whatever. Like this is what you need in your portfolio. You need an army of bots that are using different market environments and different criteria completely differently, right? Some may turn on in different instances, some may turn off in different instances, but they're all trying to find their spot in different markets. And if the market changes, you can then readapt and change all of your bots or turn off some and turn on some for those different environments. Here's just a quick example of how I do it. We've seen this before. I've posted videos about these two bots before, but it's just one of a couple of different things that I do. But this is a good example of potentially, hopefully having different versatility and agility in your bot portfolio. But this is the monthly iron condor bot that I run. And this one's still been doing okay, even in this market environment where we've had lots of volatility, lots of down moves. But this bot is set up to do monthly trades. So it's not doing daily trades. It's not doing weekly trades. It's just doing a simple monthly iron condor trade. And it's looking for very specific criteria, right? So it looks for different things like high implied volatility or like decently high implied volatility, no ex-dividend dates. It's looking for very specific criteria like 50% reward to risk ratio, 70% probability of profit, alpha and expected value are positive, right? That's what it's looking for. So this bot is set up to look for that environment, which means that sometimes if that environment is not present, then it may not trade or it may wait, and it may wait for better executions or better environments, right? And then I also have this bot here, which is my 230 zero DTE bot. So again, this bot's been doing okay, even in this environment, lots and lots of volatility. I have not turned it off. It still continues to trade, but this bot's doing something a little bit different. This bot's actually looking to just enter an iron condor position at 230 every single day. So this bot is doing a completely different strategy than the other bot. And so now I've got two bots that are running different strategies, one a more long dated strategy, one a shorter dated zero DTE strategy. And so I'm taking advantage of maybe different opportunities in the market as it presents itself. And in this case, this one's looking for a couple different things that are different than the other bots. So different environments, different pricing requirements. This one's looking for mid prices at least 230 or higher, risk reward greater than 80%. Sometimes it finds those, sometimes it doesn't find those. That's why they will execute at different times in different environments. But the end result here is that I don't have to do this. I have bots that are willing and able to monitor the markets for me and do different things in different environments, take advantage of, upward moving markets or downward moving markets or zero DT, opportunities or high volatility or low volatility or great expected value pricing. You can just program that into a bot so that you have more agility throughout your portfolio versus just having one strategy that you're ultimately trading. So I hope this generally helps out. As always, if you have any questions, please let me know. If you found this video helpful, please let me know in the comments. Give it an upvote or like, share with a friend or a trading buddy that you have out there. And until next time, happy trading.